Good evening, everyone. Good evening, Anil. Thank you for being with us. So, I have with me today Anil. Anil is a management science graduate and of Stanford University. He is currently the managing director of Pythia Data and an advisor of multiple technology startups, including CasperLabs, a Silicon Valley-based blockchain platform. He's also national coordinator of the social media and digital communication department at the Indian National Congress. Thank you, Anil, once again for being here with us at the Sovereign Opinions podcast.
Thank you,
Uh,
Sarang. Thank you. It's a great platform which you have started, and I'm very delighted and honored that I was called as one of your early speakers. So thank you very much for having me over.
Thank you, Anil, for being here. So, you are like one of the prominent torchbearers of crypto and blockchain technology, even in the so called crypto winter and the bear market. So, how or when were you convinced that this technology has wider impact and is the one for the future, actually?
So this is a great question. So I have I'm right now a tech entrepreneur, and most of my work is focused on data-driven solutions. But in the crypto space, I've been working I got exposed to it maybe 4 or 5 years back through some of my batchmates at Stanford, and then I started following this segment fairly closely. This is definitely a fairly difficult time for the crypto enthusiasts because the market in the last 2 3 months had multiple crashes,
Mhm.
and it's a not great space to be in. But at the same time, the last 1 week or so, once again, you are seeing the market slowly coming up to. So if you're looking at the trajectory where I have been following itself, I would say in the last 4 or 5 years, there had been plenty of ups, a lot of dips too. And this had been the general trend of this industry, but the general trajectory was always up. And right now, this current fall also, I wouldn't just there are multiple factors. Like, for example, that let's say we are in the middle of a very disruptive period. You have the conflict happening in Ukraine. You have inflation that is, rising across the world, including most of the developed markets. And most of the central banks across the world, including the US Fed, they all have increased their interest rates. And, when these kind of things happen, generally the trend is people will tend to draw their capital from, I would say, riskier markets, and they will try to put it in more stable markets. And crypto, as you know, is one of the most it is one of the most, let's say, uncertain and riskiest markets out there, and these are all natural. And finally, the crypto market is also not completely insulated from general markets. These are all interlinked, and these are some of the main reasons why the dip you are seeing currently is happening. But generally, one of the main reasons I am a firm believer of this technology is that I do think the underlying technology of crypto, which is blockchain, it does have
Mhm.
a lot of potential. And let's say again, these crypto coins and blockchains, they are like two sides of the same coins. Like, unless uh, the if the blockchain sector has to grow, this also will be a element of it. And this is one of the reasons I do think that despite these ups and downs, the industry will carry on, and the future is promising. So this is what I feel.
Yeah, you are like a constant proponent, as I said, and you keep writing insightful articles on this. So I came across an article we wrote in May 2021 titled India Must Not Miss the Cryptocurrency Bus. So you had highlighted two important points in it. I'd like to ask you on that. So we talked about the
Definitely.
issuance of CBDCs, that's the central bank digital currencies. Do you still reckon that CBDCs are antithetical to the very idea of crypto, which is more decentralized in its right? There are some merits to the CBDCs as well, right?
So again, I would say it depends on the perspective. When early cryptocurrencies were launched, like for example, Bitcoin, Satoshi, who we don't know who it is yet, but when he actually, like, let's say when the white paper came, it was meant to be a decentralized P2P network, which an electronic payment cash system, which was meant to be completely beyond the ambit of central banks and so on. And later, when a lot of other currencies were released too, the let's say the founders of, let's say the launch people who launched all these currencies, they had, let's say, decentralized platform as their vision. However, if you look at the internet also, I'm just looking at some of the parallels. Like even when the internet was launched, some of the early evangelists were all, let's say, their vision was internet will be a very separate cyberspace where, let's say, it will be beyond the ambits of humans and so on. But with time, you understood that that is not really a very practical thing to, it's not very practical. Similarly, even the crypto space, it is a very disruptive technology. It is disruptive to the financial markets, and end of the day, regulations will be, end of the day, even I do think that regulations are required, and that is what personally I think will happen too. And in the CBDCs, the governments and central banks and all, they are actually trying to use the blockchain technology, which is the underlying technology of crypto, to actually create a more, let's say, secure and more efficient digital payment system, where they are taking some of the best aspects of the technology and they are trying to create a different kind of, I would say, digital payment system. And I don't see anything unnatural about it. Like maybe the, let's say, if you are somebody who is a believer of the early crypto visionaries who thought it should be decentralized, then you can say it is antithetical. At the same time, this is a technology application of blockchain, and cryptocurrencies itself is just one of the many applications that could be, let's say, built over blockchain. So that way, there is nothing unnatural about it, which is what I feel.
Yeah. So yeah, just you talked about regulation a bit. So CZ, the founder of Binance, recently said that the only way to avoid failure is to stop innovating and do nothing. So as we are, as you said, in the nascent technology and we will evolve, things will break, hacks will happen, infrastructure will need to be upgraded or something. So where does the regulation come in here? Because then on the one side, there is allowing people the absolute freedom with their assets and their rights. On the other side, there is regulation, which is kind of a Web2 kind of an experience. So where do you think the regulation we can achieve the midway between the two extremes, as they put it?
Again, I would say balance will be key.
Mm-hmm.
Because again, when you're speaking about regulations,
Mm-hmm.
like I'm an entrepreneur, but at the same time I work in the policy space too, so I get inputs from, let's say, both sides.
Mm-hmm.
And even the currencies, as you know, like end of the day, it does create substantial risk to monetary as well as fiscal policies. Like even the currencies could be used for a lot of negative things too, including money laundering and terror financing, and like these are some of the things which make the governments as well as the central banks very wary of these currencies. So it's
Mm-hmm.
understandable. The other
Yeah.
thing is, let's say, many of these products itself, it does disrupt and it does cause a lot of, let's say, risk to the end consumers also. So finally, that is why I said this has a lot of potential, but at the same time, regulations are required to ensure that, let's say, the whole market actually, let's say, nobody is actually finally getting a very bad end of the stick. And there are good ways to do it. Like, for example, even in the US, in India, there are, especially the financial regulators, there are conceptualizing these regulatory sandboxes, which are control environments where entrepreneurs are actually allowed to test their products, experiment with it in a controlled setting. And when things work out, they are allowed to, let's say, go to the broader markets. So these are all some of the better ways where definitely CC is right. When, let's say, when we launch something new,
Mm-hmm.
disruptions and chaos and all is expected. But there is a better way to do it where the entrepreneurs as well as the market and consumers and everybody are protected, and even the regulators' trust is gained. And there are good ways to do it. So it is finding a system which where balance is maintained and balance is there.
Yeah. So the middle path is the best path, you think, right? In as in
No,
all the cases.
that is the feasible and practical part.
Mhm. You also highlight a startling fact, like the intermediaries, like the banks, the credit cards, the payment gateways, draw almost 3% of the total global economic output of about $100 trillion. as fees for their services. So could you please expand like how integrating blockchain into these sectors could result in hundreds of billions of dollars of savings?
So that's a great question. So when I wrote it like 2 3 years back, the global economic output was well over 100 trillion, and then pandemic started. So again, there was a dip, but I think we are back where we are again.
Yes.
But in the overall economic output, a lot of the output actually goes to a lot of intermediaries like banking platforms and payment gateways and even legal platforms and a lot of intermediaries, even government services and so on, whose main responsibility is to ensure that they can authentify or verify transactions, or they can maintain trust. So there was this recent quote which I found to be very interesting, and that was by the director of MIT Media Labs, who I think I forgot his name, but he actually said, like, let's say blockchain could be to trust what information internet was to information. So this is the kind of potential that is there, where let's say you have so much of your, let's say, of economic produce that is going to many of these intermediaries, and all this could be done using blockchain networks. And when you say 2 to 3%, you are actually talking about 2 to 3 trillion. But let's say blockchain networks can make many of these things more secure, let's say cheaper and efficient. Definitely a fraction of that itself amounts to hundreds of billions, which is a very logical and let's say linear calculation. But at the same time, here we are just talking about the primary market, because for example, the Apple App Store, many years back somebody created the App Store. Apple created the App Store, but in that App Store, with time, like, so many entrepreneurs actually created so many apps. There are millions of apps right now, and the economic value of that is hundreds of billions or even trillions. We don't know how much it is. Like, I don't know, but it's a huge market out there. And similarly, when blockchain networks with time, there is a potential to create a lot of these business applications in this verification, intermediary, trust segment, which actually could be a huge industry which we ourselves don't know what it will be, but there is a lot of potential. So this hundreds of billions is, let's say, the primary market, but the secondary market and whatever could be created in the long run could be a lot bigger. Which is why I feel that blockchain could be one of the technologies which in the long run could be the drivers of the next generation of the technological view.
So it does seem that it's a very big space that could be tapped. So you said that this the importance of blockchain for decentralized finance, especially in emerging countries now, as India is also one of the emerging countries and around, for financial inclusion, digital economy, or banking the unbanked. So how do you think we can utilize this in making these reaching to the last person or the last mile, as they say, better using blockchain?
Again, that's a great question. So again, like I mentioned, let's say the blockchain technology itself has a lot of potential, and one of the biggest aspects of blockchain, which I think creates that potential, is the ability of these networks to, let's say, do certain works the intermediaries are doing by the networks in a more secure and efficient and cheaper manner. But at the same time, let's say these are all still, like I mentioned, I don't think we have even reached the tip of the iceberg. We are still experimenting with a lot of solutions, and we still haven't created, let's say, banking networks or financial transaction networks which, let's say, meet the criterion of what it could be. So in India specifically, like, there is already a system which you are familiar with. It's abbreviated as JAM. It's like Jantan, Aadhaar, and Mobile. And through a combination of that, there is a digital system which is very highly scalable, which already has, I would say, reached the last mile, or it is in the process of reaching the last mile in a very cost efficient manner, where we have created that economies of scale. So in a scenario like this, like, blockchain could be integrated and it can make things more secure, efficient. But at the same time, let's say, even at this particular moment, I won't say that it will result in more financial inclusion or, let's say,
Mhm.
last mile, etc. Because, let's say, I would I would say the functionalities are slightly different, where
Mhm.
the value blockchains could add in these networks are slightly different. Because finally, whenever something new is introduced to the market, it is also important that it needs to create a huge difference in, like, something new is incorporated. It should create a substantial increase in efficiency,
Mhm.
which it may not be in the last mile and the inclusion part, but it could be in, let's say, efficiency and security part.
Mhm. Yes. So, just to expand on this again, in another article that you wrote for Hindustan Times, titled "30 Years Ago, the World Discovered the Web and Life Changed." So which part of the Web3 appeals to you more compared to Web2? Because today the experience is not that great, right, with the Web3. So, what are the aspects of Web3 that you are excited about, or you think that okay, this is much better than Web2?
See, quite a lot. So right
Mm-hmm.
now, see, from the time of the internet to Web 2, a lot of things they translate to the mobility space. That's where the biggest, let's
Mm-hmm.
say, um, difference came. And then there have been tremendous, like, after Web 2 itself, technology has translated to almost every sphere of our life. There have been a lot of value that has been created. If you're looking at the top 10 firms in the world, if some are in the tech sector, this is where almost optimal value is being created, most of value is being created. But
Yes.
still, something which is, I would say, a little unfortunate is most of these values are captured by, let's say, because in all these cases data is the, I would say, currency or the engine that is driving all these transformations. But most of the value is actually created, it is actually captured by many of these tech firms, big tech firms, or large organizations, even governments. And they are the ones who are controlling the flow of data. They are the ones who are capturing most of the, let's say, benefits of all this data that is being generated.
Mm-hmm.
But most of this data is actually generated by people. Like, end of the day, just in India,
Mm-hmm.
like even for Facebook, WhatsApp, most of these tech firms, it's their biggest market, at least in terms of number of users, is in India.
Mm-hmm.
So they're all generating a lot of value, but at the same time, the users, they are getting services. Yes, they are getting great services, but still, I do feel that they are actually not getting something, let's say, proportionate to the value they are contributing. So when Web3O is there, one of the aspects that excite me the most is the potential of Web3O, where the end customer, the user, the public, they will have more control of their data flows in a decentralized network.
Mm-hmm.
And two, they will actually have the capability to, let's say, get micro payments or even get small payments for whatever value they are contributing to the digital space. So this could make the internet more, I would say, democratic. It can make internet more redistributive, and it can make internet more fairer, which
Mm-hmm.
I think will be the best feature of the Web3 world. And
So,
that is a very exciting prospect.
in a word, in a way, you meant equitable ownership of the internet for the users
Exactly.
as well, right?
Yes,
Yeah.
that's it.
Recently, a 44 nation gathering of central banks and financial authorities was held in El Salvador. So, do you think it was kind of a challenge of the modern crypto man to the traditional Davos man, in a way?
Again, that's an interesting perspective.
Yeah.
So, um, again, like I said, crypto sector itself, from where it started, I used to be in the Silicon Valley
Mm-hmm.
around 10 years back. And at that point of time, most of the people there itself haven't heard of Bitcoins and so on. But let's say um, by the end of last year, the overall market cap of all the cryptos in the world had crossed around 2.5 plus trillion dollars. So it's a
Mm-hmm.
substantial amount. So this is creating a lot of disruptions in the financial sector.
Mm-hmm.
But at the same time, personally, I wouldn't even classify. these currencies as, let's say, currencies, I would actually classify them more as assets, where the value of the assets should be actually proportionate to the business value that is created over blockchain networks. And I do feel in the future that is what it is going to evolve into, because some of the aspects of these currencies, at least now, with time things may definitely change, but at this moment, many of these currencies, the high volatility, etc., makes them a little um, unsuitable for them to be actual currencies. But still, El Salvador, then Central African Republic, and two countries actually have made bitcoins into
Digital
legal
assets.
tender. And even in that 44 member countries that assemble, most of these countries are actually in South America, Africa, etc., which are still small emerging economies, and many of these countries actually the US dollar is their legal tender. At the same time, you know that when, let's say, a country like the US, like their Federal Reserve changes their interest rate or they changes their monetary policies, and then these countries, they also, like, whether they like it or not, there is a lot of disruption that happens in their own country, which they can't do much about it. So they are all looking at, let's say, different experiments where they can avoid that. And I do see this particular trajectory as a part of that, where they are looking at other options by seeing that can it work, can it not work. But how it will emerge, to be very honest, even I don't know. But let's say the high volatility of these currencies, etc. Personally, I do feel that at this particular point, it's not very suitable to be currencies, but it could be assets, where the value of the assets actually should be based on the business value that is created over the networks. So this is why I actually mentioned about that Apple iStore scenario, where Apple created the App Store, but then so many people actually created millions of apps over it, which created so much economic value. Similarly, I also do think that blockchain networks also at some point of time could create a lot of tremendous economic value. And then, let's say, all the entrepreneurs and developers and validators who are all, let's say, contributing to the blockchain networks, they are paid as tokens. And the value of the tokens at some point will be proportionate to the economic value that is being created. And that is where I feel the balance will be reached.
Yeah, but but I still think that there is not acceptance like openly by a lot of central banks and nations, as say. So one of the reasons I think it could be is that in truly decentralized technology, there is no recourse for grievance redressal, right? So you are mostly on your own, you own your assets and own everything related to it, and something happens, there is no recourse to it. So do you think this is as a part of responsibility that the banks or the nations have towards the citizens, which could be one of the reasons why they are not at all accepting at times or hostile even to this technology in some cases?
So this is a good point. Like,
Mm-hmm.
I think I already mentioned, like, there is a,
Mm-hmm.
I do understand the regulatory mindset too, and I do understand why they are very worried. Because,
Mm-hmm.
for example, many of these currencies, like, it does create a lot of instability in the physical as well as the monetary stability of even large countries, definitely small countries,
Mm-hmm.
because let's say many of these capital flows across borders are not really monitored
Mm-hmm.
by anybody.
Yes.
And then these can also be used in bad purposes. Like, for example, it can, like, anything from a lot of money laundering to terror funding, etc., etc. Actually, unfortunately, even in India in the last 1, 2, 3 years, it
Yes.
had come through certain channels. So I do understand why central banks and even law enforcement agencies and all are very worry about these technologies. The other thing is, for example, a lot of these investors, especially in India, like India actually got one of the largest number of investors in the world,
Mm-hmm.
despite the crypto market in India just being a fraction of, let's say, US, etc.
Mm-hmm.
And many of these investors are actually investors who are putting small amounts. They are not large investors.
Mm-hmm.
And many of them are actually investing thinking that this is a quickly get rich scheme kind of
Mm-hmm.
program. So many of them are not investors who are not really aware of what this is. And finally, when these large crashes come and so on, many
Mhm.
customers actually end up getting very badly hit.
Mhm.
So, end of the day, all this needs to be taken into account by a government or a regulatory authority, because it is their, I would say, duty itself to actually ensure that finally whatever is coming to the market, it needs to be consumer friendly also. It needs to
Mhm.
be entrepreneur friendly also. It needs to be innovation friendly also. So finally, regulations are required because of that.
Mhm.
And but at the same time, let's say most of the central banks and all, they are very conservative organizations when it comes to, let's say, fiscal policy. And that is why there is a lot of pushback that comes from almost every major central bank against this particular innovation. But at the
Mhm.
same time, let's say the other policymakers, let's say even in the US, like recently there were two senators who put a bipartisan bill in the Senate, which was for crypto regulations, but at the same time trying to make it more conducive to the entrepreneurs and consumers also. Even in India, there are talks that is happening where most of the many policymakers who are actually vouching for, let's say, regulation where innovation is not compromised, and at the same
Mhm.
time customer interest is also not, it's protected.
Yes,
So
yes.
there are talks going on. At some point, I do hope that there will be a balance where innovation and entrepreneurship thrives, and at the same time, let's say, consumer interests are also protected. And let's say, and the security aspects and the other aspects which the regulators fear also could be eliminated. So this is where a balance could be there.
Yeah. So one of the futurist, Brett King, he says a futurist is someone who is not wrong today. So if I were to ask you to wear your futurist hat and let me know what do you think like 2030 might look like in Web3 and crypto and blockchain domain, let's say 10 years down the
So
line. Yeah.
again, like the way technology is evolving, 10 years is actually like a very, very long time. Like, for example, I do remember the time in 2006-7 when I started grad school. That was the year Facebook just became a reality, and Facebook was just coming along. Then, like, WhatsApp became a part of our life just 8-9 years back. Then all
Yeah.
these aggregators, including Ubers and Zomatos and all, came to our life just 4-5 years back. So
Mm-hmm.
technology is rapidly taking over our lives, and a lot of things that is happening we can't even envision.
Mm-hmm.
And it is not just blockchain. There are so many of these disruptive technologies that is currently coming to our world at the same time, including 5G to which can make internet speed many times more than what it is currently. Then let's say you have technologies like AR and VR and um, metaverse, and all these things are coming at the same time, and blockchain is also happening at the same time. So 10 years could be like we could see a very different world out there. But
Mm-hmm.
like I mentioned, Web3o, the best feature I like about Web3o is something which I already mentioned to you previously, and that is it can actually make internet more, let's say, redistributive and fairer for the end customer, where right now you are seeing the reverse trajectory where people are creating
Mm-hmm.
most of the value in
Mm-hmm.
one way, but at the same
Mm-hmm.
time the value is captured by these large organizations and big tech firms, and like it's captured by the governments, but people are actually at the short end of the stick. But now, let's say, with how decentralization is happening and what Web3o can bring, it can actually enable the people to actually have more control of the value that is being created, and they can actually get a part of the value that is being created too. And this can actually make the internet more fairer and redistributive, which could be a game changer. And this is the aspect I like the most, and this is the aspect that excites me most than any other feature of the Web3 world.
Great. Thank you. Thank you very much, Anil, for that detailed insight into your mind and how you think about Web3, because a lot of us are trying to learn about this new domain
No,
and
we are all
a lot of us are,
learning.
we are still not convinced, a lot of people amongst us. So I hope that your talk would help us in way delve deeper and find about what are the good things and bad things. And it's good that you're not totally biased into it, and that you also have some of the, you're looking at it dispassionately as we are required to. So
Like I
it's a
mentioned,
great.
like I'm an entrepreneur. At the same time, I work in the policy space too. So, I get all kind of opinions, which is very positive to very negative to neutral. So finally, when I process these kind of informations, I try to be a realist. Like I wouldn't say I'm a optimist or a pessimist. I would say like I try to be as realistic as possible.
Yeah, that's really great, Anil. Again, thank you very much. Have a great evening ahead, and thanks for being on our podcast.
Thank
Thank you
you.
very
Like
much.
it has been a pleasure coming to your platform, and good luck with what you're doing. And thank you again for inviting me for your podcast series. It has been a great honor. I wish
Thank
you
you.
all the luck and thank you very much.
Thank you very much.